We selected CVS for our do not ignore this chart selection because it has a few interesting characteristics that have some potential in them. One is that it's at the bottom of the Ichimoku cloud range, and when the standard line, the center line, is moving sideways, that it often is the result that the price will run back up at least to the midline. That's one characteristic. The other is that the percent R is at the buy zone, the very low end of the range. PPO or MACD is at the low end of the range. And the other interesting characteristic that we wanted to show you was that a squeeze is taking place. And that's where the PPO or MACD squeezes against the ADX line, which is in black, or the rising and now falling minus DMA line. And you can see that on the chart they squeeze together. Another interesting characteristic, which is not the situation here, is if you click on the PPO chart, it'll flip the scale, and when you get a squeeze between the plus DMI, which is green, and the PPO, that's often a topping area. But right now we have the bottoming area taking place with the squeeze. That doesn't mean that that's a trade signal right now, but it indicates that the chart is worth watching, and that's one of the reasons we selected it. We'll go on to show you that we don't think really it's quite the time to make the trade, but we want to put this chart on our watch list for a possible trade in the future. And one of the reasons that we think it's a bit early is that the price is bumping up against the 200-day moving average and the 20-day moving average, which is this thin red line. And we've found, as have other traders, that when using candlesticks, the 250 and 20 period simple moving averages often provide support and resistance. So we think we'd like to see it bounce through there to indicate that those moving averages are not going to provide resistance in the future. Another reason that we'd just as soon wait a little bit on this trade is that the accumulation distribution line is still heading down. The faster response Chaikin oscillator is heading up, and we'd like to see at least a little hookup on accumulation distribution to confirm that indeed the stock is under accumulation. Another reason that we're not really quite ready to trade is if we look at the point and figure chart, and we'll go right to the intraday, is that we haven't built much of a base. This is a 15-minute intraday chart, 2% boxes. It hasn't built much of a base yet, even though we did have an initial breakout, and would like to see this base a little wider, because the wider the base, the bigger the move. It's not a deciding factor in and of itself, but it is one more indication that we should wait a little bit for this trade to mature. One of the reasons we are considering CVS is that its ATR is 1.2 and it has fairly decent option liquidity. So why don't we call up the CBOE option chain for CVS and we'll take a look at it. Okay, we know the rank is in the 20s. We're not going to go into that right now. But if we sort on the call open interest, we can see that we have 500s down into the initial window and slightly into the scroll. It's not super high liquidity, but it is very good liquidity. And the other thing we like to look at on the open interest sort is which expiration cycles seem to have attracted the most interest. And most of these are 225 days out, which is, I think, too far for a swing trade. But we have a couple 71s and a 36. 71 is on the high end. We like to do about 45 days normally to the next expiration, or to the expiration that we want to purchase or sell options in. But we would go to 71 if we wanted to make the trade, because the liquidity would justify it. So those are the quick reasons that we're looking at CVS. We're going to put it on our watch list. We're not going to trade it today. We're going to wait for the proper signal, and we'll see what happens then.